All right, good. So we're ready to go. For the folks on chain, let's review the week. Right now, we're going live. So I've got market overview to discuss. I've got a lot of things to chat about. This week was pretty crazy. We had a lot of stuff going on. Everything from like the Bitcoin ETF, plenty of stuff to talk about. I think this chat, I'm mostly not really focused on trading. I'm mostly in the space for the technology. I'm interested in making a little bit of money here and there, but let's at least get started with what we've got. So on the majors, we've got Bitcoin, ETF, Solana. Everything is pretty much down right now. It seems as if the market is just completely taking a little bit of a beating. Thursday news came out that we're basically going to see Bitcoin, the Bitcoin ETF. It probably isn't going to happen. I'm very much on the side that it isn't going to happen. If you're Gary Gensler and the SEC and you want to piss off Bitcoiners and crypto people, this is what you do. You gaslight them, you lead them in, and then you absolutely destroy them. So right now you can see Bitcoin hovering at about 43,000. The 7 days looks pretty good. I mean, you've got a 4% gain here on the 7 day, but that nuke on Thursday was really, really bad. You can see basically in the last 7 days, this nuke down. I think everyone is just way too optimistic that the ETF is going to happen. This administration has basically shown they're completely willing to do illegal things. And I mean illegal sort of in a sense of they believe that they're in the right. Crypto's all speculation. It's all a joke. There's some merit to it. Some of it is kind of a joke, but I'm on the side that you should be able to spend the money that you worked on to basically do whatever you want to do with it. Especially going into the Bitcoin chart here. I'm gonna transition over to that. It looks kind of like a mess. So we've got, like I said, very, very short gains, nothing too crazy here, but when you start going into like the 14-day, you'll see that big dip. That changed a lot. I mean, I'm not going to sit here and say that that's a big thing, but I'll talk more about that later on because I want to get into a little bit of the SEC and sort of what they were, not the SEC, but Congress and a letter that came into the SEC to sort of block the ETF. So next thing I've got going on are the boomers. Not really much to say there. The boomers really are just, it's been kind of a messy week. I'm talking to a lot of my friends, and many of them, especially in actual industry who work, many of them are basically saying, look, it's kind of a mess right now. Hiring's on a freeze, revenues are down. There's essentially nothing going on right now in business except pissing off workers. Workers are pretty much overworked because many of these companies did layoffs. These layoffs affect workers because the ones that are left now have to pick up the slack. So already last year, most of these businesses never gave out any sort of real substantive promotions. They never gave raises, and they're basically telling their workers, hey, can you work twice as hard, 4 times as hard, because we just laid everyone off. I think the market is sort of last year late, a lot of people basically said, look, a lot of people kind of disagree that the stocks should go down. You saw a little bit of a tapering off when the stocks sort of like basically remained flat, but it seems very clear the revenues aren't there. And the layoffs give it a sign. So because the layoffs happen, most of these businesses' operational costs went down. But at some point, the stock prices have to reflect the revenues, which have mostly dropped off a cliff. I think everyone's in this pretend and extend mode right now where it's either they're pretending to not look at it, or they're figuring out new interesting ways to basically extend their loans, extend their leases, extend whatever cash payments they need to make to sort of hold it out. But, I think the financial system right now is kind of in a really, really bad mess. I wouldn't be surprised if a lot of these companies start really, really shutting off, seeing some sort of like January major crash. I mean, nobody wants to sit here and say anything in the middle is going to happen, but at the very least, it's going to be flat. There's just nothing in the market that screams to me that, hey, we're going to see any substantial gains, which has a lot to do with crypto, because if workers aren't able to earn money and companies aren't able to earn money, I just don't see how that trickles into actual cryptocurrency. I don't see any appetite for cryptocurrency if people are kind of worrying if they have a job. So next topic up. I wanted to just highlight some stablecoins here. Stablecoins are usually a good indicator of, like, I think the real growth of cryptocurrency in the entire market. If you are seeing any sort of growth in stablecoins, it means, it's a sort of user that isn't really speculating. Maybe they are speculating, but I think it's organic growth. So taking a look at the stablecoins, we've got Tether here, USDC, DAI. DAI's pretty much nosediving down. I think USDC and Tether are very, very good signs of organic growth. I'd like to see, so no one's really talking about PayPal right now, but PayPal is integrating their USDC into their systems. I'm starting to see more tools and really sections in Venmo to basically say, hey, you can import crypto. I haven't used it yet, but I think there's something to be said there. I want to see it go well. I really think a lot of these people don't understand how stablecoins are basically the most useful aspect of cryptocurrency, because you don't need a bank account to hold US dollars, but there's something to be said there. And I really basically want to see it grow. The only worry I have right now is Tether. Tether to me is kind of a very, very, I mean, you can look back at the history of Tether. It's sort of shady. I don't necessarily use Tether. I try to keep as little Tether as possible, but I understand that that's where all the growth is. I'm not going to encourage anyone to basically say or do anything with their money, but Tether is one of those companies where I wouldn't be shocked if they ended up basically bottoming up at any point between now and the end of 2004 or 2024. It really worries me that a lot of people trust this company. I'm not trying to be rude. I think these guys have done a lot of work. They've done the work, but it's very weird to me how you see so many inflows of Tether, but I just don't see large businesses using Tether. So what is going on there? Is there some sort of Asian market where in Asia people are using Tether more, like large institutions in Asia? I don't know. I mean, I'd love if someone told me, but at the moment, I just am not seeing the appetite and the growth to match up with the major prints. I mean, in the past 1 year, well, actually not. Max. Yeah, in the past 1 year, it's went from 45 billion to about 90 billion. So in the past 1 year through the bear market, Tether's outstanding tokens have basically doubled, which screams kind of weird to me. And I've seen some tweets with Paulo Arduino. He's basically saying, a lot of the printing that's going on is sort of like preparing for events. Maybe they have the money, maybe they don't. Maybe they're just filling up their existing float for things like bridges and stuff, but that even worries me too. If you're printing tokens and you don't actually have backing, the thing is nobody really knows what's going on there. I wouldn't be surprised if it fell off a cliff between now and the end of 2024. I just don't know. I don't really use it. So next up here, we got the options market. So I've been trying to get a good handle on the options market here. I think for the most part, options are what drives the pricing. I notice when there's big option close dates, that's usually when the price moves. There's a lot of chop in between, the 1st and the 15th of every month, but the big moves usually happen right before on these options close dates. So let's take a look here. I've got CoinGlass up. This seems pretty healthy to me, 60 to 31 put call ratio. Like very large prints kind of on the January 26th. It looks like January 26th is probably the big one here in terms of open interest. Usually the closer dates are the big ones. I wouldn't be surprised if most of these open interest rankings really aren't big until you start to get out to the middle of the year. And once you start to get out into the middle of the year, that's when like you'll see people be basically speculating on like the June contracts. Those are whenever you see a lot of major moves. But right now, there's something to be said right now about January. So I actually pulled this up in open interest rank. So you can kind of see here, January, March. There's a lot of rankings here, but basically January is the big one because it's pretty close. I'd like to see us clear maybe like the middle of the month before I start not to be worried. I think there's something interesting about the closing date of the ETF filing and also the January, because it's kind of like the end of the year and you're probably starting to see people trying to liquidate to get ready to make tax payments. I know a lot of people talk about taxes, and it's kind of a strange business to try and prepare for taxes. I've heard people say, oh, people close out in December. Also, I hear people say you're going to see closeouts in March because they actually need to sell to get cash. I mean, like, let's take a look at the liquidation heat map. So I don't really see much here. There's not much here except for, oh, this is kind of a mess here. Let's take a look at just liquidation map in general. So, okay, so especially in the perps, you're starting to see like very big liquidations possible around the 43. And I kind of want to, as someone who doesn't trade, I'm just staying away from the markets. I don't really care about trying to catch this bid for the ETF. I think if the ETF is actually approved, it's one of the situations where everybody knows about it. So why would I risk any capital to buy a news event that everyone knows about? What worries me is the uncertainty is actually on the downside. No one really has a good, clear understanding of the SEC. Again, they've said, hey, they're totally willing to nuke the market or basically act illegally. So, you have to understand that maybe these guys are smart and they're saying, look, we're just interested in pissing off people. I wouldn't be surprised if they just completely wrecked the market kind of on purpose. I'm going to take a look here at funding rates as well. So funding rates are like the perpetuals market. Funding rates look pretty much in the green, which are basically saying there's a lot more longs than shorts, and you can see that in the options put call ratio. So if you're short the market, I like to do in terms of perps doing sort of like a covered call strategy where I hold spot and then take the same amount and short that on perps just to harvest the funding rate until I see a major nuke event, like usually major nuke events where you've got sort of like a 3 to 5 sigma event. When that happens and perps start going down, that's whenever I'll start exiting positions and maybe buying. But that's usually when there's a huge crash. Otherwise, I just sit in my options, not really trying to go crazy here, not really trying to lose money. Next up here, so DeFi. Let's take a look at DeFi. So the DeFi markets in general have been pretty chill. Nothing is crazy. I actually want to pull this up. So DeFi in general, TVLs have been slowly grinding up. There hasn't really been much going on. I've sort of seen some interesting things sort of coming on with Uniswap. So the big thing is the one-day change in Uniswap is up 51%. I don't know if that's an error, but that just seems very strange to me. If someone has any idea as to how that happened, let me know. I'd love to learn more about it because I don't see how Uniswap went from 0 to not 0, but I'm using DeFi Llama here. Could just be a data error, something strange going on there. And I think I'm going to transition over to the L2s. So the layer 2s, there's mostly a war going on. I think everybody's sort of wising up to Manta versus Blast. So the problem with Blast is it's not actually functioning. Manta is functioning. It's a Celestia-based layer 2, so they've got some data availability there. They're working right now. It's actually interesting to me because I think a lot of people aren't really taking this fight seriously. They're essentially ignoring it. I think when Blast first came out, a lot of people were sort of saying, hey, this is kind of a joke and it's not a very good system. But Blast has raised $1 billion. It's sitting on their smart contracts. I think it's a really interesting protocol. It might actually do something good, but whenever you're marketing your chain to other DeFi systems to come build on there, and you can basically tell those folks, come on our chain. We've got $1 billion sitting here in a box. It's something to be said. So next up here is taking a look at the Manta. So Manta has quietly just been grinding up. It's currently at $700 million. Their campaign right now with their boxes and points distribution system has probably been one of the best layer 2 distributions I've sort of ever seen. Like, think about this. It's creeping up the base. And while a lot of people are farming, and there's something to be said once this program ends, if a lot of people will leave, the fact that Manta's even achieved anything close to base is fascinating. I think it's something to be said for their business development team. They're working hard, they're busting their ass, and I'm in the Discord, so I guess, sort of a disclosure, my choice in this L2 war has been Manta, only because it works right now. People should probably take a look at it. I'm not, it's not financial advice, but having a layer 2 that scales right now and actually has apps deployed on it says way more about your system than I think other people are giving them credit for. I originally got into it because I noticed the team was basically all Chinese, and they were funded by Binance as well. This kind of gives me hints of when Binance Smart Chain came out, and everyone, especially on the Western side, wrote it off because they sort of thought, oh, it's Binance, it's Asian, and I guess there's a lot of racism sort of when it comes to Western media sites and sort of Western crypto traders. They just have this inherent lack of trust for Asian protocols and teams. But Binance, it was sitting sub $1 for years, and almost a year, and now it's up to $200. So if you invested some money, I mean, I'm not saying go crazy and put your entire stack on Binance. If you invested something into it, you would have made a killing. An absolute killing. So, by the way, this is what I'm talking about with a sort of like lack of, or sort of like racism against Asia. So I can't even see Binance on here. Like, it's just not listed. And I know it's a side chain, but maybe this is just for layer 2s and not, okay, maybe it's not, because Gnosis chain isn't on here either. But I don't know. I mean, I'm sort of looking at the situation and saying, when everyone's running away, that's usually when I think there's a good discount, and it's kind of worth just playing a little bit of Manta, because I seriously think it's probably going to be a good competitor. I don't really like the idea of restaking, but should people at least think about having some of their money into restaking protocols? Maybe. Is it fun just to sling around for your Venmo or sort of whatever you're doing? Probably. If you're just tossing around funds with friends, maybe like a fantasy football thing or whatever, a beer slush fund, why not have your F3 staking and earning some value for you? So next up, I wanted to take a look at prediction markets. So prediction markets are kind of pretty good right now. Lots of stuff going on in prediction markets. I think this year might be the year that prediction markets get a little bit more, I think, coverage. Polymarket is kind of the only one who seems to be generating a lot of value for the space. I think it's just easy to explain to normies. The regulatory arbitrage with the ability to go political bet is something to be said. So I like to pay attention to it just personally as a news source. I'm not saying you should go spend money on it, but the biggest things here, Democratic nominee really hasn't moved. Everything's pretty much straight. There's no surprises here. I think the biggest thing you could probably do is short Vivek Ramaswamy. I don't think he's going to get the nomination. And especially on Polymarket, there is a market for whether he will drop out before February. This might be the easiest money you could ever make. He'll drop out. At the most, he has a VP shot with Trump, and I don't even think that's possible. I don't really pay too much attention to politics, but there's only one clear thing here. Vivek is not going to get the nomination. Even if Trump falls over and dies, he's just not. I think he's just way too... he's too much of a fringe candidate. The hardline Republicans aren't going to endorse him and back him. I mean, they're allowing him to go out and do the politics. If I could say one nice thing about him, he's the only one on social media. So Trump has his own media, so normies kind of sort of don't use that social media. Most of the normies that I know, like I'm in Massachusetts, which is an extremely progressive state, nobody cares about the Republicans right now in general. But you pretty much can guarantee Trump is going to be in the race. I mean, if his convictions don't get him in trouble. But this probably is the only one where I'm basically saying, look, he's got to drop out. My personal view is Vivek should start a media company. He's a smart guy. He can discuss topics well. I just don't think the Republican establishment, especially hardline Republicans that have been in the business of politics for years, they are not going to endorse him just purely on the fact that he has no experience. There's nothing more to be said from that. He's a business guy. He really should start his own media company. I think Trump is sort of doing that with social media, but I'd like to see Vivek probably start a fully geared political channel or any other channel. Also, I am starting to see some news with the Super Bowl. The Super Bowl, that's coming up. So let's drop that in here. Super Bowl on Poly Market right now. So we've got, lots of teams here, nothing too crazy. I think everyone's basically gunning for the 49ers to go for it. The Eagles are probably at a 7% now that they're a wild card. The regression has been super bad. I've actually been paying attention to football this year, but they've went from absolutely like an elite team to something where the market is basically saying they're questionable. This is one of those things I don't like about prediction markets because you can't really make any money. There's certain things that have good value, and maybe you can send a punt on there, but at that point you're purely gambling. Like if you're betting for the Eagles to win, they've got a long road ahead of them and a lot of work to do. Also here for the Super Bowl, you're only looking at $9,000 worth of open interest here. It's not really great to bet on sports. I'm not a big fan of betting on sports at all, actually. So Polymarket, it's just the kind of people that are on Polymarket are mostly crypto enthusiasts. I don't think there's much to be said about sports betting on here. It's just not something that people do. The actual sports bettors I know, they go on pretty big venues here in the U.S. Like I'm from New Jersey, so most of the people I know are actually allowed to legally bet there via Barstool or some other platform. So I'm not saying take a swing on it. If you're kind of interested in prediction markets and are looking for some way to get involved and interested in it with a $9,000 open interest, you could probably put $10 or $20 without moving the market. I just don't think it's super, super worth it. So talking points. So that's kind of like the market overview. I'm going to try to do general market overviews with options, DeFi, L2s, whatever, stablecoins. Try to do that every time I come on. But the talking points are kind of open. And my biggest one right now is this Lido staked ETH DPEG scenario. So people are kind of talking about it. Apparently Celestia is they're deregistering their validators and they're going to move some ETH. It's worrying people because there's only about 300 million worth of reserves in Curve, but they sort of are fumbling around with a couple $1 billion worth of Ethereum. So if they actually market dumped it, this would get destroyed. And some people are worrying that, hey, Aave and its market would completely blow up as well, because a lot of people are doing like a par lending trade where they lock up staked ETH and borrow regular ETH and do whatever they want with it. But the staked ETH, if it's earning 5%, they're arbitraging the lending and the spread a little bit just to try and make money. this is one of those events that I just think, you as a trader have to plan for. You can't assume that par is going to be held between these staked derivatives. And I just seriously believe that, if you get eaten by this, that's honestly on you. It's unfortunate, but you have to kind of have your wits about you and not just go messing around doing whatever you want. I would love to basically say, hey, I think you're doing something smart and I support you, but like this is one of those big risks. So right now, wrap stake ETH is currently, so you got about $2 billion in Aave. So if this liquidates, let's check the details here because I'd like to see what the borrow rates are. So it's about 60% of the bandwidth here, and liquidation threshold is 81%. So, and you're taking a 6% penalty and a loan to value of 80%. So basically, you could lock up, and I'm pretty sure a lot of people are leverage trading this. They're locking up their wrap stake ETH, pulling out ETH, and then going to buy wrap stake ETH again, and they're basically redoing this over and over again. This is really dangerous, and this is why I say don't leverage. Like, leverage is the root of all evil. If you leverage, you might get destroyed. And assuming par will never break between some of these tokens that should be face value, it's a mistake a lot of traders have learned. Like, that's how you end your career. This is like basically 2008. After the mortgage backed securities were all seen as basically nonsense and worth zero. Par started breaking between banks, and when par breaks where $1 is not worth $1 anymore, the entire markets just completely go haywire. So that is one of those tail risk events that I just don't see people talk about. Like, hey, what if par breaks between these things? One of the things sort of that happened earlier or in the middle of last year, or kind of like lately last year with Alchemix is a good example of that. So people were LPing Alchemix with Alchemist ETH with ETH, but the Curve pools got hacked. So Curve pools got hacked, everything went out of whack, and the Alchemix ETH just stopped being par value. Alchemist ETH is actually an even softer peg. Like, it really doesn't have ETH underneath it that should match it. It's not a guarantee. It's mostly essentially like a wrapped version of Yearn. So there's some ETH in Yearn, it's earning people value, but there's nothing that says that Alchemix ETH needs to be par. So be careful out there. Don't try to leverage your ETH. I don't understand why anyone does that. Like, you're just asking for trouble. It's the silliest thing I've ever seen. It's a very easy way to just never be part of crypto ever again because you lost all your money. Speaking of losing money, I'm sort of looking right now and seeing that Antonio Brown's kind of like a sad person because he used to be a really excellent football player in a couple of teams that I was interested in, but he's just gone into like this weird. I think most people agree he has some mental health issues at this point, possibly related to playing football. So he's basically gone and promoted a Solana DeFi app, or I don't even know if it's a DeFi app. It kind of looks like it's it doesn't even exist. So this is kind of leading into it. Wasn't a DeFi app. It looks like it could have even been some kind of like fake version of a meme coin. And you click the link and it's gone because everybody's basically said they've either rug pulled or just got hacked. Some people are saying in Twitter right now that their funds have been stolen by interacting with this contract. This kind of worries me because I think most people don't understand you should never interact with wealthy people that are promoting cryptocurrency. Wealthy people's entire livelihood depends on endorsements. So the only things they're endorsing to wealthy people are probably things that should not be endorsed. I get that might be confusing to some people, but it's essentially adverse selection. So the projects that need a wealthy person, like, what does Antonio Brown know about crypto? Nothing. There's absolutely nothing he knows about crypto. I don't mean to be rude to him, but he doesn't know math, doesn't make any crypto money. He's not a developer, not a software engineer. Like, if you're buying something because someone like him is promoting it, you should probably reevaluate why you're in crypto. And some people apparently did this because I guess, they're chasing whatever scam is out there. I don't agree with it, but like, it's a hard lesson to learn not to do this, but you should not do this. So next thing up that I want to talk about is Friendtech. I don't really have a screenshot of it, but it seems like there's some internal stuff going on in Friendtech between one of the developers, Pancakes Bruh. Look, I'm a pretty big fan of Friendtech. I think it's a novel use case, probably one of the only novel use cases that came out last year that just wasn't shilled to the maximum extreme. There's a couple of projects and narratives right now that I see in the Ethereum and DeFi space that I think are just overdone. I don't care about restaking. I think it's kind of like you're investing in a business that is operating validation or validators. To me, that's even worrying because it is kind of like something that securities laws should be a part of. I mean, people are trying to say it's decentralized, but it's very hard for me to kind of believe that. A lot of these decentralized staking protocols have centralized components to them. So you probably just as an investor would want a contract in place. Like same thing in terms of Bitcoin mining. Like most Bitcoiners, they have publicly traded stocks available to do Bitcoin mining. And that's good because no one can scam and they have a sort of fiduciary duty to make sure you're earning your money. I personally am not crazy about restaking. It's just not something I'm super into. Again, I'm like kind of interested in Manta, but I just wouldn't try it. So as for Friendtech, so sorry, I went into a little bit of a rant in terms of that narrative, but that narrative is just super it's very shaky to me. Friendtech, that was one of the narratives that came out last year and was totally fine. I think it was novel use case, trying to get people involved into crypto using like a social thing. Everyone hated it. Everyone thought it was the silliest thing. That's usually when I raise my flag and I say, wait a second, if everyone hates it in crypto, it's probably going to be something good. I'm not saying you should dump all your money into it, but this has happened before, especially when DeFi first came out. Maker DAO came out and nobody cared about it. They thought it was the silliest thing. Why do we need stablecoin dollars lending? Turns out it's like one of the largest right now because they've added real world assets. It's adding so much money. So Friendtech, it's giving me the same vibes. Just, hey, it's quiet. Everyone hates it. Same thing with Manta Protocol. Quiet. Everyone hates it. So that's usually what I say. Okay, I'm going to put a bid in because it's very likely there's good value here. Whatever its actual value is, it's probably half, maybe even like 1/3 of what it's currently got trading for. Not much to say there. So Friendtech, it's something I pay attention to. There's some conflicts right now with Pancakes Bruh and sort of players in the space that have been a part of the Friendtech team. I just don't pay attention to it. I think if you've worked for companies long enough, every company has problems. I don't know what the deal is with the contracts. It's not really any of my business. I'm seeing people kind of like retweeting it. Most of the people seem to be supportive of Pancakes Bruh. He seems like a nice guy. I follow him on Twitter. Not much to say there. Like, hey, a developer, whether he got fired or laid off, I've been fired, I've been laid off, I've had to fire people. I've been on teams where we had to lay off people. It's something that's bad, but at the end of the day, the workers feel bad. There's a lot of emotions involved, but people move on. It's just how efficient companies are ran. They have to have the option to lay people off and fire people. They have to be able to scale down. Personally, I think Friendtech, it's kind of been a mess right now. The UI is not super great. I haven't seen any real new developments, and it's a little bit worrying to me. Like maybe they need to shed some weight to move a little bit faster. Not saying that Pancakes Bruh is a bad developer. I'm just saying maybe he didn't just fit in with the team. And I've been personally on that side too, where like, hey, I don't fit in with this team, or hey, someone else doesn't fit in with this team. And it's totally normal in the business context to let go of people. But I think a lot of people just heard something about, there's some rumors that he was laid off right before vesting. I don't really understand why anybody cares. Most of these tokens and systems are worth zero. A lot of these vesting options probably aren't going to be worth that much at the end of the year. At the end of the day, I don't know. I think people are just trying to pile on that, hey, someone got fired. In friend tech, it's one of those things that people hate, so they're looking for any excuse to hate it, especially Racer. Next thing I wanted to talk about was there's a Bitcoin L2 that is out called Botnix. This has been pretty crazy. So right here in Boston, there's a Harvard team coming out, and they're essentially working on an EVM for Bitcoin. I have no idea how that would work in terms of security guarantees, whether or not the smart contract will guarantee that your address gets your Bitcoin. It's probably going to be something more like a sidechain. I just personally, I'm somewhat interested because I think it's something that would be good for the Bitcoin space. Just having the ability to have an EVM. If it's something like an optimistic system, I don't like, in terms of technical details, I don't know much about it, but it's kind of interesting to me because I would love to be able to bridge and purchase Bitcoin without using an exchange. Anything that can help the Bitcoin space, like I think there's a lot of people that are working in the Bitcoin space, especially with NFTs and other things. They're moving, they're doing cool stuff. Like I've tried the testnet here with this Botnix layer, and it seems like it works. It works. It's interesting. It's from a team that seems kind of focused. I'm shocked that they aren't really doing any like huge push, but I don't know really the details around it. But I wanted to mention it because I just think it's interesting and novel. Next thing up, so I wanted to talk about the Bitcoin ETF. So one of the things that is somewhat worrying to me is every time a senator says something or does something, everybody in the crypto space immediately rags on them, and like it's kind of reminding me of poker where people are just getting tilted. So the big thing with getting tilted is you just shouldn't get tilted. There's a lot of people that hate cryptocurrency for whatever reasons. I don't know if they're paid to do it. A lot of times in financial markets, people will be paid to talk about things in a bad way because they have large players, large institutional players shorting things. This is totally normal in finance. So recently there's been this letter from Better Markets, which a lot of people think could affect the SEC decision. Letter from Better Markets basically says, it's from folks. Better Markets is ran by Elizabeth Warren's crew and some other people that are somewhat involved in just essentially working with the markets. Again, they hate crypto. It's whatever, it is what it is. There's a small letter here basically begging the SEC, please don't approve any ETF. I think it's concerning, but my big problem with crypto folks is, again, we're just tilted with anything. Anything Elizabeth Warren tweets about, everybody piles in and rags on her. Especially in Twitter, they'll just respond with nasty comments. And to me, it's just, if you're in the crypto space, you're probably a little bit smarter than most people technically. So it worries me whenever you just immediately rag on anyone who hates it. Just keep moving. Like, crypto will never go away. Like, one of the things right now you're seeing with American politics and just the world in general is every technology is getting ragged on by senators. I don't know if most people are in the AI machine learning space, but the recent bill executive order from Biden, I don't know if people, again, are paying attention to it, but it was just written wildly incorrectly. It essentially tries to regulate something that has nothing to do with machine learning, specifically the type of compute. So they're basically saying like, oh, the type of compute you use to generate and train AIs has to be registered with the US government, which, not even going to get into how that is measured. But the point here is, hey, they didn't even write it correctly because it's not the type of compute that's used to train AIs. So everything that is going on right now with the government trying to regulate AI, whether it be AI, housing, cryptocurrency, etc., they usually get it wrong and they usually get it late. So don't worry about it. I just feel like everybody is freaking out because of this. And, if you are freaking out, maybe it's time to deleverage. If you're freaking out because you think the ETF isn't going to happen, maybe it's time to deleverage. So I've been saying for a while now, I don't trust the ETF at all. I am not. I'm not really long right now. I don't think I should be long. The ETF approval is hinged on a government agency approving it. This should be a sign that you should not be interested in it. So on Polygon right now, the yes is dropped down. I mean, at some point earlier on, it was sort of around like 87, 88, but it's starting to float down. And there's some trades bringing it down somewhat to around 70. I think I saw 72% at one point. Folks, like, hey, we've got to like plan for this. If it's not going to happen, it's not going to happen. So this is also by January 15th. This is crazy to me that anyone, there's so many news articles saying it's getting close to coming over the hurdle. I just don't really care. I mean, if you're not leveraged and not completely invested in the ETF, you shouldn't care. If you have a plan that's like dollar cost averaging, it's not really an issue. What I saw on Twitter was after the nuke this week down, whenever people started realizing, hey, there's a possibility it could be denied, everyone started panicking. I saw some people basically say, hey, I got, I'm broke now because I was over leveraged and I got deleveraged on a flash crash. Like, it should be a sign that you're just over leveraged. Like, don't do that. I personally wouldn't trade anything involving the government, whether it be a ban, whether it be approvals. Like, I just wouldn't do it. Get out of the way, let that stuff happen, and if it goes down, you have an opportunity to buy more. Like me personally, I just sell calls. I'm not really interested in holding spot. I'd rather just reap insane funding rates right now. Everyone has been way too long. And that's usually a sign that it's a good time to sell volatility. The volatility for crypto has just been really, really high. So, not something I'm wildly into. And I think that's pretty much going to be it. First stream, wanted to get something out there, test out the stream. Hopefully next time there'll be, like, maybe by Monday there'll be more stuff to talk about. I'm hoping it gets a little bit more fun. I'm hoping there is some volatility moves, especially to the downside. I'd like a very, very good entry point. Again, I think everyone is way too over leveraged, way too trusting of the SEC that has proven time and time again it's happy to do things illegally. If I get an entry point, I'd be happy. I want something where I don't have to look at it ever again, and put a significant chunk of my funds in. And I'll say to myself, look, I got into the best entry I could. When there's typically blood on the streets, that's when you want to come in and buy, and then I'll make some investments. So I don't know. That's kind of it for me. I'm going to shut it down. I'll probably come back Monday. I'm trying to do something Monday, Wednesday, maybe Friday as well. Friday will probably be a little bit more fun and open-ended. So, all right. Thanks for tuning in. Again, if you're living on chain, like, this is the spot for you. I hope you got a lot out of it, and I'll try to get some more content for you. Bye-bye.